How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. And today we're going to be talking about Exela. I know it's been a while since I've given you guys an update, but I want to make sure I get a video out for you guys before the end of this week. And of course, I let you guys know inside of a YouTube post that, it's just been super hectic, and it's part of the reasons why I didn't get to doing a video earlier. So I won't waste any more time. Let's jump into the agenda. If you're new to this channel, I just want to let you know we have timestamps down below inside the description. But if you are a shareholder or you're thinking about taking a position, I highly suggest you watch this full entire video. So the first thing we're going to be going over is the technical analysis. We're going to be taking a look at the price action. We want to know support. We want to know resistance. You guys have heard me talk. If you see it break through that 21-day EMA, what the downside risks look like, and as far as where the price is right now, it is right on point of what we were talking about previously. Then we're going to be taking a look at Fintel, the short interest information. As far as shorts, are they still heavily vested inside of this play? We're going to find out, and we're also going to be taking a look at the history, seeing the changes between the short volume ratios. And then we're going to be taking a look at the order flow distribution. This is key. We want to know, are there any large scale orders that went through today? The reason why this is important, because this tells us whether institutions are loading up or not, and this impacts the stock price. And then when all of that is done, we'll be going into the final thoughts, so let's get to it. So we're going to be doing a technical analysis for Exela. Let's see how it performed on the day. So it ended up closing at $2.66, being down 10.14%. On the low, it tested $2.66, and then on the high, testing $3. Taking a look at the volume stats on the day, you can see we traded at 25.257 million shares, and the average volume over 10 trading days being at 39.445 million shares. So we did have below average volume on the day, and it's part of the reasons why we ended up seeing some pressure on the stock price as well. Now, when we take a look at our 1 year daily chart, you can see from the RSI down below, it is at 47.73. So yes, it is in the oversold territory. Taking a look at the indicators on our chart, you can see we have strength above the 200-day, the 100-day, but of course we've broken through the 21-day EMA at $2.85. So as far as how far it can go back, the next level of support to look out here for is right here around 250. I talked about in previous videos, we want to see some strength. We want to see the uptrend, and it breaking through the 21-day EMA does give us a signal showing, hey, it could pull back even further. And it's one of the things I wanted to make sure that you guys were also prepared for if you were thinking about being inside of this play. Now, as far as if this 250 area does ever decide to end up breaking, then the next level I'd be looking forward to seeing how well it can hold be right here on 245, and also right here around 225 as well. So going into next week, you have those possible areas of where it can pull back. Now, as far as for the upside, so as far as $3 is concerned, it is now the psychological area for Exela. As you can see, $3 was a resistance area on the day. So, of course, you're going to want to look forward to seeing a reversal, a big time move, and it coming back to be above the 21-day EMA and then getting past 3, and then wanting to see how much strength it would have getting above $3.12. As you can see, that is an area of resistance there as well. But if we have a lot of volume coming through the stock, then, of course, I could see this happening. But it's so key that you make sure you're in the right setup here. And it's part of the reasons why when I said in my last video, it is very key for Exela to be above the 21-day EMA, especially if you are considering a trade opportunity. So we're on Fintel. We're going to take a look at the short interest information for Exela. So as we scroll down on the page, the short shares availability is at 1.2 million, updated 4 minutes ago. And as far as for the short ball free rate, it is at 7.41%. Taking a look at the history of the short volume ratio, you can see for the close on the 11th, it was at 42.52, and then for the 12th, it's at 41.94. So Exela still continues to have short squeeze potential, and this is great news for many who are short-term traders trying to trade off of the fluctuations. But just make sure that you have the right technical setup, which means an entry and as well as an exit strategy if you're going to be inside of this play. Now let's take a look at the order flow distribution for Exela. So we can see here on the inflow is at 13,336. 6, and on the outflow it was 14,788. So it was an outflow day. We could see here on the large it was at 3,215, and on the medium it was 7,209, and on the small it was 2,912. As far as for the outflow side on the large, it was 4,122. On the medium, it was 8,412. And then on the small, it was 2,254. When we take a look at the large scale orders in the last 5 days, you can see for the past 5 days, 4 of them have been big time outflows, except for the 11th, which was an inflow day at 862.44. So one of the things that we want to take from all of this data that we just covered, we see as far as institutions are concerned, they are taking part in regards to the large scale orders. They are buying up shares, but also on the other side, a lot of institutions who have sold out of their positions as well. So this is something to keep in mind, but we do see there is interest coming from the institutional side because they're the ones pretty much making up the large scale orders. We're seeing a lot of trades happening on both sides, on the medium and as well as the small. And as far as today is concerned, it's no surprise we ended up having an outflow day due to the volatility we had inside of the markets. A lot of people are chalking this up to being Friday the 13th. And of course, you're going to be hearing this all over the place. There's a lot of speculation, but I just look at this as a pullback inside of this particular play. So now let's jump into the final thoughts. So for my final thoughts for XELA, like I was saying in my previous videos, it's very key for it to stay above the 21-day EMA and also to present a trading opportunity. This is part of the reasons why inside of the private Discord today, I was asked, yo, Dre, XELA is pulling back. Is it a great time to get into the stock? And I said no. Just because it's pulling back doesn't mean you should just jump right in. We want to make sure as far as our indicators are concerned when we're using our moving averages and so on, that the setup is actually there. And it wasn't there today, and that's why none of us decided to trade it whatsoever. And I do not believe in holding stocks like these overnight as well, especially when we're not getting the same amount of momentum and volume inside of the play like we were seeing in the past. Anyone who's inside of this play right now, I know many of you do believe in the long-term prospects. You shouldn't be concerned about the pullback whatsoever because you have high conviction. Now, when we went on Fintel taking a look at the short interest information, XELA does continue to have short squeeze potential. But in order for us to actually force a short squeeze here, we have to have a lot of buying volume, a lot of pressure coming into the stock. So if the volume does continue to be low, it can continue to pull back, or we're going to continue to see the price action we are seeing. And also, if it does continue actually pulling back, we want to make sure as far as the indicators are concerned, you want to keep a close eye. I was talking about that $2.50 level. When I tell you about these particular levels, it's not about you going in there and just trading it blindly. That is not the way to go about it. It's more so to make sure you're prepared and you see, okay, what are the downside risks actually looking like? And that's what it's looking like currently. Of course, this could change going into next week. But again, this is why you need to do your homework and as well as your due diligence on top of watching these videos and any video overall in general that you're seeing on social media as well. So for anyone who's asking, do I believe that XELA will get back to the $3 level since it's now a psychological area because now it has to fight to actually get back to it? Yes, of course, there is a possibility of it getting back to this level due to the fact of price targets being at the $4 range. And of course, if there still continues to be a lot of interest inside of this play, then we could see a spike going to that level. I can't tell you exactly when that's going to happen. I am not a psychic, but one thing you want to keep in mind is see, hey, are institutions continuing to buy shares and also keeping an eye on catalysts and so forth. So that's all I got for you guys today. Hope you enjoyed this video. We'll be talking real soon.